Talking financial organization and a professional practice does not have to be boring. Are you ready for a few money in, money out ideas? It's Susan Gunn coming directly to your head to make you think. Can you handle the truth? Because she is known for being energetic, laughs a lot, and gives honest, sometimes direct, but always practical advice. It's time now for Money In, Money Out.
If we have learned anything this year financially, it is how important our relationship is with our bank as a small business owner. Oh my gosh. So I won't tell you the name of the bank, but they were not helpful. I wanted a business line of credit. And so I went to my big box bank. And first of all, it was really hard to communicate with them. There was not one person that I could talk to. And then I finally did talk to somebody on my second visit to this big box. And they talked to me and sent the paperwork through to get a business line of credit. It's not like I was asking for hundreds of thousands of dollars either, guys. I was asking for $10,000. And I thought, I'd be okay with $5,000. I had a project I wanted to do for the business, and that's what I wanted. And so that's, kind of just as an emergency tool too, to have a line of credit. Well, I was denied. I'd been at this bank for 10, 15 years, quite a while. And so I was like, okay. And I just looked at the guy and said, you do new? No, I'm not a big depositor or anything, but I'll move all of my accounts to wherever I get a line of credit. And their response was pretty much they didn't believe I'd get a line of credit anywhere. I'd already been in business for, 5, 8 years, maybe 10 years. So I've been in business almost 24. So I had been in business for a while and long enough to know that I was going to be in business for a long time. So it wasn't like I anticipated going out of business. So there was a state bank called Frost Bank that I had heard some really great things about from friends that had moved their deposit accounts from the big box banks. And they were having great relationships with Frost. And so I literally drove to the bank, drove to Frost, went to the front door. A gentleman greeted me with a very honest, sincere smile on his face, real warmly said, "Hey, welcome to Frost. How can I help you?" And I kind of looked around and went, okay, nobody greeted me at the other bank. It felt really weird. I was kind of wondering if they were doing it to sort out bank robbers or anything. But no. They were just being really nice. And so I said, well, I was kind of interested in getting a business line of credit for my business. I have this idea that I wanted to put into place, but I just need a little help financially to be able to do that. And he looked at me and he goes, what kind of business do you have? Honestly and sincerely curious about my business. And so he goes, here, let's walk around the corner. So we walked around the corner and met with another commercial banker and talked about my business for about an hour and a half. And they were so excited to hear about what I did and what I was thinking about doing with the business line of credit, and appreciated the fact that I kind of just wanted it for an emergency too, just in case. And I want you to know that within an hour and a half, it was an hour and a half after I left the bank, I had a line of credit. And that's what it is with dealing with a bank where they just love their customers and their clients. It's amazing. Too many times, business owners think their business is too small to actually have a relationship with their bank. I did. They think, and quite frankly, they're led to believe by some of the big box banks that because they're not big depositors, they aren't worthy of a banking relationship beyond a checking account. Not so with every bank. And it definitely wasn't so with my bank, my Frost Bank now. And I did move all of my accounts from that other big box bank whose initials are WF, by the way. Anyways, I just had to throw that in there. I bet if I did a survey to ask if my clients actually knew anyone at the bank they deposited their money, more than half of them would say no. I find that astounding. Now, and just quite frankly, let me make sure you understand. I use the digital features of my bank. I download into my QuickBooks for my business, and I download into my Quicken for my personal. I download it into my line of credit. I download everything. I do online banking. I pay my bills through their online banking opportunity. I mean, I use all the assets. Oh, I forgot. I also take pictures of checks with my cell phone to deposit into the bank. And so I use all those assets, and yet I know people at the bank. Since we've all learned how valuable having a relationship with our commercial bank can be this year, I thought it would be helpful and way beneficial to bring my commercial lender and my friend Katie Carlson to join us on the podcast today to give us some insight. Katie's been in banking for 11 years, all with Frost Bank. She's a corporate bank specialist. Initially, she was an underwriter. So if there's anybody that we really need to have talking to us, it's that right now for sure. Now, I just like to say she's called a relationship manager. Okay, that's really appropriate for her as she works with business owners like me on a daily basis, because I will tell you during the whole PPP thing, she was a relationship manager. She like put the words into that definition of relationship manager. And Katie and I have actually, I don't know, Katie, how long have we known each other now? Probably 8, 9 years.
Yeah. Yeah, that's about
It's
right.
been a while. And I just have to say, I was laughing about this again. She's another ginger friend. I don't know what the deal is. I'm getting all these ginger friends of mine on the podcast, and you can't see her, but she's my another ginger friend. Say hi, Katie.
Hello. Susan, thanks so much for having me today. I somewhat regret that I wasn't there when you met Frost, because what a story. But I am grateful that I've been your relationship manager for 8 or 9 years now. And I've enjoyed getting to know you, and of course, getting to know what you do with your clients and your speaking arrangements. It's been a treat. So thanks for having me today, and of course for pointing out that I'm a ginger. Obviously, I'm proud to have this. This is a 3rd generation, 4th generation hair color, so it's important in my family.
Mine had auburn highlights, I guess is how I'd say it. I think my grandmother, she passed away when Dad was 12, but she was a ginger. And so we definitely have that in our ancestry. And her dad was a ginger. So that's what I've heard anyway.
Yeah.
So anyways, it's fun. I had Tina Blanchard, we've talked about this before, as my guest on the Thinking Outside the Box podcast. She was the other ginger, by the way. And the one thing that sets Tina above many that would be considered competitors is her personal touch to everyone and everything. And I could say the same thing about Frost and the same thing about you, Katie. I see a theme in these podcasts because if we don't worry about the competition so much when they've got the personal touch, right?
Yeah.
That's what sets us all apart. Because the financial institution industry, holy moly, is full of banks of all sizes, all different offerings, features, and focuses. But many big banks have forgotten how important customer relationship is, and not so at Frost. Oh my gosh, did we not hear the stories during the whole PPP thing about how people called their big box banks and never got any phone calls back? I can tell you about 10 offhand, just friends that had that experience.
Yeah.
But, and then I can also tell you about my friends that have you as a commercial banker and the mutual friends. Oh, you're working with Katie? I am too.
Yeah. I've been, like you said, I've been at Frost for more than a decade now. And over the decade, I have, on many occasions, I've said that I'm not a banker, I'm a Frost banker. Because there is a very clear difference in the way that some banks conduct business, and it's not the way that I want to conduct business. And so I enjoy being a relationship manager, being called a relationship manager, and being provided the platform in which to do that. Right, Frost allows me to function the way that I do, which aligns with my core values individually. And so I think this time that we're in now has made it abundantly clear to businesses how important it is to align with people that are for you and that are available to you. Because when things get tough, you need your banker just to answer the phone.
Yeah, no kidding. And I'm an American, I hate to even say this, I'm an American Airlines person, and they've really struggled the last few years, and they've forgotten that personal touch. But I have long thought of them as an extension of my business. I depend on them to get me to my speaking engagements or to my clients, more often the speaking engagements. And so I feel like Frost is the same. I depend on you. You're an extension of my business. I'm successful because you encourage me to be successful and you give me the tools to be successful. So that's important. I think that's important to look at. And I think it's really sad that there are so many people that don't have any relationship with anyone at their bank.
Yeah, I couldn't agree with you more. I mean, at the end of the day, our CEO talks a lot about it's our responsibility to be a force for good and to make people's lives better. And the reality is that our money is not any greener than anyone else's, and our services are not any slicker than
Right.
anyone else's. But at the end of the day, I can hold my head high because I know we treat people correctly and we treat everyone as though they're significant, regardless of how much money you have in the bank, how many services you use, whether or not you borrow money. You're treated correctly, and that's important.
That's to me, that's the most basic offering,
Hmm.
being treated
It
like a
should be
human.
the expectation.
Yeah, yeah. Well, it was kind of at that other bank. I expected that, and then when I didn't get it, it was like, oh, I'm at the wrong bank. So
Hmm.
let's take a look at the
Yeah,
basics. Over the
yeah.
years, with the evolving technology, oh my gosh, have we not evolved? And I know that you remember how much I used to complain about not having a direct connect before I moved from that big bank. And it's not an issue now. I've gotten used to it. I've just dealt with it. And so, not all banks do offer that direct connect with the QuickBooks software or Quicken. But let's take a look at the basics. Um, I've recommended over the years, and this whole COVID thing has kind of messed with that too. But I've recommended over the years that you really only needed one primary operations account for your checking and one that I call an emergency account as a backup for savings, just in case you need it, a business savings account, money market fund, whatever you wanted to have. And that's what I say in the money in, money out. When all of this happened, with the PPPs and the IDLs, there were so many recommendations. I just finally said, you still only need one bank account. So I'm just saying. And then I ended up getting two. So, but that was for my idol. And so I kind of really had to struggle with that. And, I kept talking about it. And so I finally said, go ahead.
Hmm.
But from
Yeah,
your perspective, Katie, what should business owners look for in a bank?
yeah. So to your point about accounts, obviously at the end of the day, it's up to you as the business owner. But a vast majority of my clients follow that rule of thumb, and they will have one primary checking account and a savings account of some kind. Obviously, as a banker living through a pandemic, I'm all in favor of an emergency reserve account.
Yeah.
Early on, as the pandemic struck America, I heard statistics such as your average business has 30 days of cash on hand, and your average restaurant has only 16 days of cash on hand. Again, as a lender who's lived through PPP and has had plenty of conversations about idle, even though the banks aren't facilitating that, it feels that that's true anecdotally in those that we have discussed all these matters with. And so I'm a huge advocate of having a reserve account and having some cash set aside for these rainy days that you can't see coming. In terms of what you should look for in a bank, obviously we've hit the primary, which is the relationship piece. But outside of that, I do think finding a bank that is a sound place to do business, a safe, sound place to put your hard-earned dollars is important. So do the best you can to research, whether that be just talking to friends. If they're publicly traded, obviously you can uncover that information easily, but be aware of who you're dealing with because although we're getting more questions about FDIC insurance these days, at the end of the day, if we had a large scale financial crisis, that's you're going to be in the boat with everybody else fighting through that lovely battle. Not to downplay its significance, but obviously, as we all know from previous recessions before, some financial institutions survive it and some do not. And so I think
Right.
it's important to know who you're aligned with in totality and not just the person that you like. And so, speaking of FDIC insurance, I will mention, obviously, several years ago in the Great Recession, they increased the coverage to 250,000, per depositor, based on ownership and tax ID and Social Security number, all of that kind of jazz. And rather than get into the minutia of that, I would just recommend the FDIC has a website, the Electronic Deposit Insurance Estimator, EDIE. And so I would just recommend taking a look at that if you had any questions about how you want to restructure. Or if you're concerned about that particular item, that's a really good resource to help you figure out the best way to allocate your dollars in order to take advantage of that. Obviously, go ahead.
Yeah, no, I was just going to say, my step grandmother had many different accounts scattered all over different banks because of what happened during the Great Depression. And her family was hit really hard. And so that's what her dad did after that. And so that's what he taught her to do. And I think it'd be interesting 15, 20 years from now. Hopefully I'm still not doing this 15, 20 years from now, but it would be very interesting to see the psychological effect that what we've gone through this year is going to be doing on our bankers and on our depositors, and seeing if they have different multiple accounts scattered across different financial institutions. I recently had a case, and I know I told you about this, where the client had 7 different banking accounts and 4 different accounts that she was depositing patient revenue in. Yeah. Yeah. One account.
Then that's my only feedback when it comes to that type of philosophy is that it's a balance, right? If you have a relationship somewhere and your banker gets to know some activity and say an employee or not, it could be an unknown third party that's a fraudster, and they come in and try to conduct some business and it looks fishy to the teller can engage your banker and ask if these things are normal. And of course, as your banker that you have a strong relationship with, we have a really decent sense of what you're up to or what it's unlikely that you're up to. And so I would just say that's a balance. Obviously, FDIC has a purpose and it's a very valuable purpose. But I suspect there would be some inherent challenges to having your money at 7, 10, 12 different places.
Yeah, here's the challenge. Here's the challenge. They have to update all of these and reconcile every single one of those accounts in their QuickBooks.
Yeah.
That's why I say it just makes it their life a whole lot easier if there's only one account. So, especially one account that all the revenue is going to.
Yeah. Oh, absolutely. And that's what I would say. Outside of the things we've discussed so far that are important to look for in a bank, technology is important. Obviously, it doesn't. Having a computer show you some numbers does not substitute for a strong relationship and a banker with expertise, but it's important. I mean, really, if you think back, obviously, I'm a little over a decade into this, but I have the privilege of working with bankers that have been in this industry for 40 years, and you think back to banking as it was before the digital era that we're in now, and it just wasn't as easy to track down all these moving pieces. And so now here we are. A lot of my clients are getting busier by the day, it seems, regardless of what industry they're in, especially the ones that are medical field. And fortunately, we have technology on our side. And so although I wouldn't say it's an end-all be-all to look for a bank, I do think it's important to ask what the capabilities are technologically. Obviously, a mobile app allows you really to access that information so quickly. You can sneak in 15, 30 seconds, a minute here and there, and do the best you can to keep a watchful eye, because it's certainly important to have help in running your office, but it's also certainly important to keep an eye on the prize. And so technology is a huge piece of that.
I love the ease of it. I got the TXU, the electric bill, a few days ago. Grabbed my phone, pulled up the app, logged into my account, went to bill payment, paid the bill, and I'm done. It's like, stick that in the done file. Yeah. One of the things, though, that I wanted to clarify, just in the differences between some of the banks, because I think I told you this, one of our conversations this year, of our many conversations. I had a bank, it's an East Texas bank, that didn't even have bank statements online. I've run into banks that you couldn't look at the check or the deposit to see the detail. I've had banks where they only had 30 days of detail. I mean, it's interesting to see the variety. And so they may not know that they don't have that until they have a need, like somebody embezzling in the practice, to where they would need to find that information out and then they can't access it or they can't download it.
Yeah.
And so,
Yeah. I do think obviously it's easy to be able to access it yourself. But the other thing I would add on to that, Susan, is that you need to know how long the bank is keeping those records, because there is certain information that our clients can see online for a certain period of time, but we internally can pull farther. And so, especially when it comes to embezzlement, you could be a number of years after the fact or trying to uncover how far back it went. And so I think if you're content with your local bank that does not provide your bank statements online and some of these other technological features, you do though still need to understand what bandwidth they have of information in case you need to ask someone to drum up this information for you.
right. And one of the other things that sets apart some banks is the bank fees for the number of deposits. And with medical and dental right now, they're getting EFT insurance payments, for instance, like MetLife pays per patient, not 3 or 4 in one payment. And so they'll have 30, 50 MetLife deposits a month. And there's still banks, some of the big banks, big box banks, are charging for excessive EFT deposits. It's interesting, but that's when you find someone that understands your business, you know, like a commercial banker,
Yeah. Yeah.
so that they can guide you into what kind of account to have. Now, you guys have a couple of different digital offerings
Mhm.
for businesses. Tell me about those.
Yeah. So our run of the mill standard online setup is Frost Online Banking. Obviously, it's designed to work with both individuals and small businesses, especially those that are smaller operations, meaning one or two owners, or you have one owner that will conduct the banking. It's a really great platform for that. Obviously, there comes a point in time in a business's life cycle where they need some assistance, maybe with reconciling and some of that important but basic, straightforward activity. And so for that, we do have Frost Online Banking for Business. It's a nominal charge and it allows you to have up to 5 people view only. And by nominal, I mean $5. And so you could give your CPA view only. You could give your office manager or your bookkeeper. You could give these individuals view only access, but you're still protecting the flow of the money, right? They're not able to transfer dollars. They're not able to authorize or conduct any other form of business on your behalf. And so it really is a good way to have oversight and to still allow people to assist you with those functions, which of course frees you up as a business owner to handle the many other
Yeah,
hats that you wear.
right.
And so, those are kind of the first two tiers, if you will. We actually recently onboarded a new small business online banking platform called Business Connect. It allows more services to be utilized, services such as wires, ACH, check positive pay. And then, of course, the big boy, if you will, is Treasury Connect, and that thing is locked and loaded. So you can use services, all the same services that I've already mentioned, but you can also use lockbox, high speed scanners for remote deposit. So there's a bandwidth here. Of course, there are a variety of service fees that attach with that, and there's a variety of manpower hours that attach to that, just depending on what you need. Though
Right.
there is a variety of options out there for you.
Yeah, I have a lot of practices that have used lock boxes for their insurance checks coming to. Now,
Yeah,
with the advent of
yeah.
EFT, I'm not sure I think that's kind of unnecessary. You can go directly to, but EFTs are really hard to track
Well,
as well.
yeah, you'd be shocked. You'd be shocked how many clients we still have on Lockbox and how many items come into those
Wow,
lockboxes.
that's incredible. That's
Hmm.
really cool, though.
Yeah, yeah, and it. I mean, if it accommodates a need for your business, it's a handy
Yeah,
service. Obviously, it's not for everybody, but it can be really handy. You have somebody picking up the mail and sorting it and making deposits, and then scanning the images, to the online portal. So it can really help in the checks and balances for receiving revenue
Yeah.
checks and applying those appropriately internally. So in your accounting software. So it could be a really handy service. Obviously, it's not for
Right.
everybody. You really have to have enough check volume. Obviously, there's a cost to it because it is actual manpower processing the items for you. And so you got to have enough volume to make it worthwhile. But
Well, and you guys are doing the check scanners
oh,
too.
yeah. Yeah.
So you have those available so that the practices can actually scan to the bank account. But so one of the things that I still, there's two things that they have to keep in mind if they're doing the scan checks. And the first one is it's still a daily deposit. You don't wait until the end of the week. You don't wait until the next day. It's at the end of the day as the last patient has left the practice, is what I always say. And then the second thing is, what do you do with cash? So cash is one of the things we're going to talk about embezzlement in a minute, but cash is one of those things that disappears
Hmm.
if it doesn't go to the bank. And if you're scanning checks, what do you do? And I really encourage the business owners themselves to write a personal check for the cash, personal check. And in the memo of the check, they'll write exchanged for cash. And so it's dated the same date as that collection date. So it should match their day sheets, their deposit reports for the day. And then that check is scanned with the rest of the checks for that daily deposit. And so those are the two things that are really, I like scan checks if they do them daily and if the cash is deposited as a scan check. That's why I like scanners if they do it. The emphasis on the if
Sure.
is a
Yeah,
big emphasis.
sure. Absolutely. Well, and we find that, in light of the mobile app era that we're in, I see a little bit less scanning if they have a low enough volume, right? We are an electronic paying world. And so a lot of the doctor's offices that I work with, they won't have that many checks come in a day. And if that's the case, the owner can quickly take a photo of the checks and then, of course, retain possession of them. So you don't even have to engage a full login process on the computer and sit down and scan it. And of course, that time commitment may prompt you to have an employee do it. But with mobile deposits, I have plenty of clients that the doctors will do it at 8 p.m. And for us, mobile deposits are same day business. So as long as it's made by 9 p.m., you've got availability the next day. Because because we're relationship oriented, we trust you with your deposits, and even though we haven't collected it, we're going to give you credit for it the next day to operate your business. And so many of my clients take advantage of mobile deposit to allow that cash flow to move quickly.
Yeah, I would imagine in our area we don't have too much of the cash, but Colorado, there's
Yeah,
huge
sure.
pockets of, since I'm national, but it's huge pockets of people that are still, I mean, one of my fraud cases that I'm working on right now takes huge amounts of cash still. But, that's a whole different story.
Yeah.
So I want to talk about credit ratings a little bit because when all of this started this year, I could see some potential problems down the road with credit ratings and loans and things building up. You and I were talking actually in a prior life of mine, way before I owned my own business 24 or something years ago. So it's been 25, 30 years ago. I used to work for this little known credit bureau called TRW that's now called Experian. And a lot of my financial recommendations and advice and things that I come with that background. Things that I learned from them. In fact, I didn't even tell you this, Katie. I saw it the other day. I guess it was last year. A long time other day. Um, the other, when you get old, it's always the other day.
Yeah.
The
There you
other
go.
day, I pulled up something on the Experian website to look at, and was looking at it and saw my FICO score, and I just kind of stared at it for a minute. And the guy came back on the line and he goes, "How can I help you?" And I said, "Hang on a minute, I'm having one of those verklempt moments." And he goes, "What?" I mean, you could see he's like, "What? I have some kind of a psycho lady on my phone." I was on. We when I worked for TRW, we were just starting to explore if FICO was a possibility. Would TransUnion play? That was the big question. And is Equifax going to be a part of it? Equifax was more interested than TransUnion, or the other way around. I can't remember. It's been a long time. But we were exploring that and talking about the options, and TRW was really the leader in that whole thing. I don't care what's out there that's known. I'm just going to say TRW was the leader in making all of that come about and happen. And I was very proud to be a part of that think tank initially. I didn't have anything to do with it beyond that. But it was neat to have that idea, and somebody else brought it to the table. And when they said, what if? And that what if didn't get squashed down. And then to see it online was really cool to all of a sudden go, wow, we were talking about what if, and it happened. Anyways, all three bureaus together can accumulate up to a score of 850, which is great. Above 800 is excellent. So very good, 740 to 799. Good, 670 to 739. This year, though, has seen a lot of businesses maxing out their credit debt ratio. I'm really concerned about our industries and all of our businesses, regardless if they're in industry or not, getting lines of credit and using their credit cards more frequently, maxing them out. Katie, explain the whole thought process of debt ratio and how it affects perhaps future loan processes.
Sure. So when it comes to personal lending, it's a very direct influence, both of those things. The credit score and the debt to income ratio they're the heavy hitters. On the business side, we realize that we do business with people, not businesses. So we look at it globally, meaning we're going to take into consideration the business's financial condition, but then also the owner's and personal guarantor's financial condition. So in our world, because we're looking at a bigger pie, if you will, it's a piece of the equation. So as opposed to being a front runner. And so I will say specifically for commercial lending, the owner's credit score matters. But we do take the time to look at if you do have a low score issue. And I'm not talking about very bad. I'm really talking about the upper end of the fair range. We will take in consideration what's causing that as opposed to just a black and white figure. Because again, we're looking at a comprehensive picture. So with that picture, everything else is clean, meaning, right, there's enough cash flow to service the debt. There's sufficient liquidity or cash on hand to back that up. There's sufficient assets to collateralize the loan. Everything else is in order, right? The owner is living inside their means. They're not running at a personal cash deficit. Then we will consider that piece of it and vet it, if you will. Look through the report as opposed to just taking a number and going on down the street. Now, those ratios, though, since I'm telling you we look at this globally, we also take in consideration the debt service of not just the business, but of the owner. And so that debt to income ratio can have an impact directly on our underwriting, meaning that if even though the business is having an excellent year and net income is strong to handle all the business debt and then some, but the personal debt is too high to allow the global debt service coverage ratio to be sufficient, then you can put yourself into a tough spot.
Well, it's one of the reasons our economy has struggled so much. In 2010, in the early 2000s, with people who were upside down in their houses.
Mm-hmm. Yeah.
They owed more than the homes were worth. And so their debt ratio was horrible. Then they found out that they couldn't pay. And so they really found themselves in a quandary of payment, and they didn't owe much. I will tell you, that's when I became a fan of Susie Orman. I love her session on Can You Afford It? And she'd have somebody call up and say, I want to buy my boyfriend a motorcycle. And she'd say, how much debt do you have? How much revenue do you have? Blah, 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 and go through it. And she'd say, no. And chances are he's going to leave after he gets the motorcycle anyway. So you don't need to do that. I I just really appreciated it, or very tough, direct. In fact, somebody told me one time after a speaking engagement that I was the Susie Orman of the dental industry in telling people when they shouldn't or should not do anything. And I'm not a CPA. I just speak from common sense and to say, hey, this is something we need to look at. You need to understand this is going to affect your future earnings and actually, it won't affect your future earnings, but it will affect your future profit on how much debt you have to pay. And so you don't want to leave yourself boxed into a corner that you barely have enough to take home.
I want to make sure everybody's aware that, you hear about debt to income ratio, and that's the lingo in personal lending, but the equivalent of that in commercial lending, to ensure that the business is healthy, the business's balance sheet is healthy, is we do take in consideration the ratio between the total liabilities or total debts of the company compared to the retained earnings or the equity of the company. That's important. We need to keep that ratio in order, because just as your example on the personal side, if you end up with too much debt on the business side, you can take a perfectly healthy company and put them in a bind. And of course, none of your bankers that care want to do that. And so keep in mind there's an equivalent on the business side that's important to keep an eye on as you're managing all of the facets of your life, personally and professionally.
So I know that the 5 factors that are considered in a FICO score, that 35% of it's payment history, 30% of it's credit utilization, and that means utilizing what credit you've got available, your revolving, everything. 15%, how long you've had credit. 10% on your credit mix, how much of it's revolving, how much of it's like a line of credit, I guess, how much of it is mortgage. 10% new credit. I thought it was interesting that 10% is new credit, because if you've been around as long as I am, you don't really need any new credit. But hey, it's like, okay. But 35% of it's payment history. And so going back to what I said at the very beginning of the COVID, you have to make sure that you are making your payments on time, because that's the greatest percentage of what's considered in your FICO score. And then 30% of it's just what you were talking about, Katie, is that credit utilization. It's how they're utilizing it, that debt ratio. And they can't think, whereas you want them to think about their business, but it also, if they've got a family, they got to think about their personal life too.
Absolutely.
In the midst of everything that's happened. We're not 100% sure that we're not going to be going through this again next year. I don't want to be the doom and gloom person, but I'm just going to be realistic to say that the Spanish flu lasted 2.5 years. And so if we look at that and we say this was a pandemic and it's weird, and if anything, it's going to take us 2.5 years to get over it financially from a business standpoint anyway. And so we have to plan ahead. We have to plan ahead. How many times can you and I say that, Katie? We have to plan ahead. So should they be checking their credit rating and looking at those things? What do you think?
Yes, absolutely. I am certainly a fan of monitoring services. I'm certainly a fan of checking your score and report periodically. We're in an era now where, it used to cost you quite a bit of money and be a member in order to do those things. There are plenty of reputable platforms now that you can source.
Yeah.
That will help you.
You only have to have an Experian breach to
to get free credit
method. To get free credit reporting, which is how I got mine.
Yeah,
so now I'm like addicted to checking my FICO score.
Yeah. Well, and I know some people very much prefer to check all 3 bureaus when they check it. I'm more of an advocate of just check one of them and keep an eye that things, nothing unexpected has occurred or any of that kind of jazz. I only check, I have one that I really keep up with regularly, and then I check the other 2 about once a year just to make sure there's not something odd on one. It can happen, certainly. I've experienced it personally where something pops up in one report and not another. but it's not a regular occurrence. So, even if you can't manage to check all of them all the time, pick one from a reputable free service and keep an eye on it. And I will say about that, the mix and the input of payment history versus credit utilization. Obviously, 30% influence on credit utilization is not to be or downplayed. However, I've personally seen that, you end up high because you kind of miss the cutoff of that particular month, but you make a payment, it comes back down, the score seems to rebound a little bit better than if you miss a payment and you now have that negative history hanging there. And so I think the way you order them is not just important based on the percentage of their weight, but also the time they can linger and cause you some ripple effect down the road when you're trying to move forward financially.
Right. And one of the things to keep in mind is that the businesses report to the credit bureaus your credit history. Okay. Businesses typically report to a credit bureau that's stronger in their area. Now, I don't know because of our digital market now that is still the case, but it was when I worked for TRW, that TransUnion was really strong in the South Texas area. And California, of course, was TRW strong. I think there's a good mix across now, but that gives credence to your checking all three bureaus now just to see. But you definitely want to check the one that is the strongest in your area. The other thing that I was going to say, I was going to mention that when I had the Experian breach, I locked all my credit down. And you can do that easily with the three credit bureaus online. You just lock down their credit. What's cool is when I was applying for the SBA loan, I unlocked my credit so that they could check. When I got my car last year, I unlocked so that they could check. And then I went back and I locked it again. And so my credit stays locked. And that's how that keeps that no identity theft from happening, FYI. But I think it's interesting that I'm not sure. It used to be that when I worked for TRW, that you were supposed to close credit card accounts if you weren't using them. And then it became a bad thing to close the accounts. I'm not sure what it is now. Do you have any idea?
Yeah, I operate under the latter. Personally, I will leave them open. Of course, non-use after a while, every now and then, somebody will close something on me. That's just happened recently for me, but I rode the train as long as I could there and didn't have a need to use it. But I operate under the belief that leaving it open is better. Especially if you're younger in your credit history. I've noticed there's more influence. If you've got 40 years of credit history, you may not have that same consideration when you're making decisions.
Well, I think it's interesting that it used to be close it and now it's keep it open. I do think it's still keep it open. So all to say that our advice is fluid, depending on what the situation is. Just to let
in 2020,
Yeah, no kidding. I mean, especially 2020.
Mm-hmm.
So protecting your credit rating is so important this year for everyone. I will just say, let's just get that out there. You guys need to check it out. Do you have any strong words of advice to our listeners about their credit, their loans, perhaps? And be direct and honest because that's what I am.
Yeah, sure. I think from a banker's perspective, obviously things don't always go as planned, right? So plan A would be to keep your ducks in a row and pay your debts on time and pay them in full, not just for the sake of your credit score, but for the sake of upholding the character that I'm sure you would uphold in your life. But secondarily, we know things don't always go as planned, so don't hide from your banker if you have a problem. Don't hide from the institution that has loaned you money or that you'd like them to loan you money maybe a year from now, and you've had trouble in 2020. Just be forthcoming, especially with a banker you develop a relationship with. It is easier for us to give you guidance on the front end and be honest with you about what we think you could qualify for versus not, so that we don't waste your time. It's not some long drawn out process only for us to find that the problem is too challenging to overcome And so I would and I would also strongly recommend, a lot of times bankers are the last ones to know, or maybe that's just my perception. But there are times when I feel like we're the last people to know when you're planning and charting something for your business. And I would just highly recommend that you incorporate your banker earlier, especially if you've had some trouble, either personally or on the business side. Because again, your banker has some input that can be given that can help prepare you as you're recovering from something that didn't go as planned.
That, that's really good. Good advice to bring you guys in at the beginning, not at the end. Let's talk about my favorite topic, which is always embezzlement. Several of the things that we've already spoken about have been a part of many of my previous and current, for that matter, embezzlement cases. A lack of information available online, no deposit detail online, very limited days of access for documents, no statements online. One of my largest cases was 1.1 million, and she was able to do it because of the bank drive-through ATM never questioned why insurance checks were being deposited into her personal account on a regular basis. We talked about this before we went on. $783,000 later, they were still clueless. And that was 2010, in all fairness. I would hope that they've changed their methods of clarifying what should be deposited, what shouldn't be deposited. But on your side of the aisle, what are banks doing to aid in embezzlement prevention and fraud prevention?
Yeah. So um, obviously, embezzlement is a very important topic. And the reality is, I'm not going to tell you anything new about that. The best line of defense is human capital and checks and balances. Um, Paying attention, certainly we don't want to be the kind of people that are paranoid or the kind of people that can't trust others. But we also don't want to hand over the keys to the kingdom and cross our fingers and hope that it goes well. So, from an embezzlement perspective, that's the first line of defense. I mean, I can't urge enough. I know that everybody's really busy, but I can't urge enough that you check the bank accounts regularly. Don't wait for the statement. Don't wait for the CPA to prepare the tax returns. Take a look, and if something feels like it's a larger than normal amount, you can even set reminders or alerts by email and text message these days through a lot of banks' online banking portals. So put those measures in place. Those are the saddest, in my opinion, when I get the phone calls and someone's encountered embezzlement, especially from a long-term
Yeah.
employee. And I'd like to tell you there's some fancy way to keep that in check. But it's just good old-fashioned trust but verify and checks and balances. Now, the other kinds of fraud, banks are on the forefront in fighting that. I want to be clear. People think in this digital era that the most instances of fraud are the electronic versions, and the reality is we still see plenty of check fraud. It happens all the time. All types of fraud: debit card, wire fraud, ACH fraud. For those kinds of fraud, the electronic versions, I highly encourage you to align with a good and strong IT company. Make sure that they're protecting you. But again, human capital is the most important part, right? Computers cannot do the critical thinking that we can do. And so I don't want you to create a doom and gloom environment in your places of business, but you need to have periodic conversations with your employee base. Remind them not to open attachments on emails. Remind them not to take an email for granted. An email may come through and it looks like it came from the CEO telling you to wire money. Pick up the phone and call and make sure the CEO sent that email. Business email compromise is alive and well, unfortunately, and it costs businesses lots of dollars every single year. And so the best way, again, to control that is good old fashioned training and conversations about that matter. Again, don't want you to bombard them every day, but some type of nice, consistent rotation to remind everybody. I mean, I have clients that subscribe to services that allow you to send emails that are to tempt your employee base. And if you click on
Wow.
them, it'll remind you why it was very important that you shouldn't have clicked on it. And so, not to shame anybody, right? No one's trying to shake a finger in someone's face, but we all need to be reminded, because you can spend all the money that you'd like, but that human capital piece is key. It's very important. And the last piece of the equation from a fraud prevention perspective, is the services that the bank offers. We offer services like positive pay, ACH blocking, ACH filtering. I think it's vital that every business owner consider all of the services available. Some of them may not make sense for you, right? If you only write one check a month out of the business, then maybe check positive pay is not worth the cost. Because there's not a strong benefit. It's a low risk for you. And so by no means sign up for everything just because somebody offered them to you. But by all means, please consider all of those services available. Because the reality is people will pay for insurance for their houses, their cars, their businesses, the equipment within the businesses. But then they're hesitant to spend money on fraud prevention services. And the reality is that's your hard-earned money in an account. And it deserves to be protected. So I ask my clients to consider fraud prevention services as an insurance product.
See, I tell them to consider the Ask the Expert service, which is what I offer. It's 2 hours of remoting in and looking at their practice through my eyes. Mm-hmm. That's the bottom line. Through my eyes, see your practice, see how your practice management software is set up, see what it looks like. And it's such a low cost service that they will always walk away with a full pad of homework of things to do. I've not had one person that has ever said in an Ask the Expert call, wow, this was a waste of time. Because it's not been a waste of time. They learned how to protect their practice and what they weren't paying attention to that they thought they were paying attention to. Those are my fraud services.
Sure. Yeah.
It's from my standpoint, because if you could look at your practice not through your eyes, but through my eyes as a fraud examiner, that's really gold for you. So, oh my gosh, this is so much information, Katie. I am actually going to end it here, and I will record another podcast about the payroll tax deferral because we're at 52 minutes. It's amazing. You and I could talk forever about the banking industry and the things that we need to pay attention to, especially in light of everything that's happened to us for 2020. Gosh, it's been I never want to close a podcast without offering a word of encouragement. And I do not want anyone that listens to this to feel like defeated, that their FICO score maybe is horrible, that their debt ratio is, in the barrel, and that there is no way that they can possibly crawl out. I want you to know that you can. You just set a goal, you figure it out. If you need some help, that's what I'm here for. You need to reach out to your commercial banker at your bank and establish that relationship and talk to them. They might have some great ideas. Commercial bankers are in a lot of ways, you guys are consultants because you see all the businesses and you think outside the box, which was the whole premise of talking to Tina last week. Sometimes we get such a stinking narrow focus about how things are done in my type of business that we're not open to new ideas that could be really fresh and could be great. And I think your commercial banker would be an awesome place to start. And so if you don't have a relationship with somebody like Katie, then you need to get one. And if you're in my area, Katie, I will have her information on my podcast. Katie, amazing. Thank you so much. I really appreciate it.
Thank you, Susan. It's been an honor. Thanks for giving me the opportunity to share and all these words of wisdom.
Valuable information for sure. And so on that note, I will record a podcast about the payroll tax deferral. So I know you were looking for it on this one. So stay tuned. It will be next, and I'll put them both up on the same day so you won't miss it. But anyways, I just wanted you to be able to listen to Katie alone as she needs to be. Standalone product. All right, Ginger girl.
Thanks, Susan.
Thanks so much, Katie. You guys take care. Have a great rest of the week.
That's a wrap for this podcast of Money In, Money Out. Thanks for listening. Be sure to write down the most valuable tip you learned today so you don't forget it. And remember, you can find out more about all the valuable books and services Susan has to offer at www.susangunnsolutions.com.